Um, Thank you everyone for joining. We got a huge crowd today. This is great. Um, Again, this is an event for real estate, commercial development, um, and what's been going on mostly these past couple this year, specifically with the whole pandemic going on and how things are changing. Um, so I want to introduce our first speaker, Diamante Zarba. He's a good friend of mine. We've worked together in the past, and yeah, Diamante, if you want to hit it off, just tell us a little bit about yourself.
For sure. Andres, thank you guys for having me. First thing, I am the CEO and founder of Zarba Group of Companies, which owns Woodlawn Media Group, Woodlawn Property Group, Woodlawn Auto Group. I'm kind of a jack of all trades. I got into real estate about 6 years ago. Spent my first year or two in residential, and over the years, I've transitioned into commercial in New York City, and that's kind of where I found my home. My company now, we manage nearly 500,000 in assets. We have done over 10 million transactions. We're very active, and we're very active in our market, and it's a pleasure to be here.
Yeah, thank you. So when did you start realizing?
Yeah, I actually got into real estate in I would say 15 at this point. I was playing college basketball, and that was my path. And somewhere along the lines, an injury had happened, and I had to pivot. And that pivot led right into real estate. I started actually at Coldwell Banker up in the Catskills. And over the years, like I said, I've transitioned from residential into commercial and kind of specializing in investment sales between the $1 and $5 million market, small cap market.
So wait, which injury was that?
That was actually my sophomore year of college. I had a devastating wrist injury, and that kind of derailed all my basketball plans and my basketball goals. Unfortunately, fortunately, I made it through it, but unfortunately, I had a whole pivot of my life. I had 65 stitches, tore 3 tendons, tore a ligament. It was a gruesome injury, but like I said, I'm thankful for being here today and thankful for kind of where it's made me kind of pivot into.
Awesome. Thank you. Thank you so much. Um, so our next speaker, Shahid Jafri.
Yeah, thanks, Andrew. Really appreciate you guys putting this together. And Diamante, thanks for having me join today. So yeah, I can give you a little bit of background. I founded Jafri Capital about 2 years ago, 2.5 years ago. We are predominantly focused on equity placement. Specifically, we specialize in opportunity zones. We work with high net worth investors, small family offices, and then some select large institutions, and place equity across the capital stack. In today's environment, we're seeing a lot of preferred equity behind agency debt, or even on ground up construction in New York City or Miami. Our firm is headquartered in Manhattan. We've only historically done deals in the New York MSA, and I'm actually in Florida right now in the Tampa Bay area doing a small transaction. So recently, last year, our company, I took on an investor who had over a 30-year Wall Street career and ran a few institutional trading desks. And we launched a private debt capital markets business to complement the equity. And times are changing. I would say for our business, the reason where I think the business is going is I am relatively young, and however all the decision makers are, have a lot of gray hair. But in the next generation, we're going to need both. And it's on Diamante earlier. It's the combination of the experience and closings with the new technology, prop tech, digital transformation, really combining the two. And some things I tell people that kind of come out of college is, a lot of people will tell you, especially if you want to go into commercial real estate, you're going to get there and just learn for 2-3 years. And, it may have been like that, 5-10 years ago, but the competition is just, the bar is a lot higher now, and an example is my younger brother. He's at a firm called Starwood, right? When he graduated from Cornell, he had to do an internship for 6 months before he got to where he is. And his mentor didn't even interview for the job. But it just shows that the competition gets more. But if you put yourself in internships, stuff like this, I think you go in there saying you're going to learn, but you also have, new technology skills, new informational skills, new data sourcing skills. In school, people say, look at Bloomberg. I would, get access to CoStar, get access to Trep, get access to Reonomy, do stuff that'll
More
get you
in-depth.
comfortable. And
I agree.
and yeah, no, thank you for the time.
Yeah, thank you so much. You said you're in Florida right now?
Yes, sir. I'm in
nice.
the Tampa area.
Nice. Lucky. I think Laura's in Barcelona. You're in Florida.
Everyone's running from the
Yes.
snow.
Yeah. Well, thank you so much, Shahid. I really appreciate your input and information.
Yep, thank you.
Laura?
Right, moving on to someone who's very close to me. My dad is our next speaker. He is head of the investment team at Savills, and he's also the non-executive chair at Warehouse REIT, which he set up. I'm sure he can give you a bit more information about him before he goes into what he wants to talk today. So I give you Simon Hope. Take it away.
Thanks, Laura. So very quick backstory on me. I work, I'm a Savills lifer. So Savills are listed on the London Stock Exchange, formed in 1855. I joined in 86. There were 500 people in the business then, just in the UK. Today we're 40,000 people, 20,000 of which are in China. We're certainly not the biggest. I mean, CB Rich Ellis are a very good shop, and they would be 3 times bigger than we are. There's certain markets that we're as strong as them in, and I'll bore you a bit about that in a minute. So I, like a lot of people, thought I had a career in professional sport. I was a very, very poor jockey on a horse. I then wanted to go and train the next Derby winner. So the closest I could get to Newmarket, which is world headquarters for thoroughbred racing, I got a job with Savills as a land agent, having studied estate management, and so I qualified on the rural side. But I worked out that your fee, whatever business you're involved in, you could be in law, you could be trading pork bellies. Your fee is linked to the value of what you trade, and every building in the square mile in London was worth 150 million, and yet there wasn't a rural estate that was worth that sort of money anywhere in Europe. So I merged across onto the commercial side, and that market today, the commercial market, which the other 2 speakers are involved in, that's roughly turns over $2 trillion. 85% of that market is in 10 countries. 50% of that market is in North America. So North America leads the world in terms of commercial real estate. And if you look at the Urban Land Institute and look at the weightings of CalSTRS, Starwood, all of these sort of houses, office would be the biggest class. Retail historically was strong, but we can talk a bit more about that in a minute. Life sciences are a big market, R&D, a medical office, PRS, family, multifamily, etc. So if you look at the business schools in North America, Wharton, Harvard, Yale, all of these shops, Pace, etc. I think your business schools, particularly around real estate, particularly around the MBA and business generally, are way better than the European and Asian schools. And so if you look at the trend analysis in terms of property, look at Empire State Building, look at warehouses. Look at Walmart. Walmart, in terms of a major food warehouse, the world follows America when it comes to sector specialization. So a market that I'll talk about just in a little minute is life sciences, which is going gangbusters, outside of North America, and lots of money chasing that. If you look at the another trend that I got heavily involved in was logistics. So one of the roles that I've performed at Savills has also been chairing the fund managers, because of this iPhone and looking at the disintermediation of the high street and the shopping mall to the warehouse, and what Amazon, it's so much easier just to plug into Amazon and buy something and not have to spend 3 hours going into a CBD, parking up, coming home, all of that diesel consumption, etc. But so we've got these schemes that are just falling by the wayside, and that's what are they going to be used for? It's hitting town centres. We're all a social race. We like collaboration. We like seeing each other. We get energized. People sell to people. How do you start getting people back into the CBDs? It's a challenge of our age, and I think you've got to build more affordable housing, more workforce housing. Too much value has gone to the developer and the institution, and a lot of this housing stock just isn't affordable. So today, we as a company have got hundreds of shopping malls to sell around the world, but it's uninvestable. It's a real problem, and I think there's a massive amount of opportunity for young people to get into the sector, but it's coming up with transformational ideas.
One of the key reasons I asked the question is, and students probably won't remember this, but when Benetton came to the United States and the Gap, which was a huge business here, what I had not realized was that a big part of their failure was the wrong real estate choices. That Benetton had gotten to the point where it had over-proliferated to the point where the individual stores couldn't support the lack of volume in the areas. And Starbucks actually in the States had that problem recently, and they completely rethought their real estate strategies to make sure that there weren't too many stores too close together. So it's just interesting in terms of that interaction. And of course, part of our interest in this whole topic is what is the new normal going to look like? And it's exactly what you just talked about in terms of what is the future of the mall. A lot of our malls in the States, the anchor stores are failing, whether it's Sears or Kmart or some of those big businesses. And without the anchors, what does it turn into? There's some discussion about transforming our malls into senior living homes.
Yeah, I was going to ask about that as well. I had seen that kind of the ideas for converting former retail spaces into either apartments, senior living, student housing. I've also seen the possibility to transition it into co-working spaces. Do you see any real use of that, or is it kind of just an idea that'll come and go? Speaking to Paul. Yeah, Paul.
Yeah, I think I'm maybe interested in Shahid's view, but I think this whole pandemic has thrown up a number of questions. Yep. We've touched upon the shopping centre. That's available space. Does that become click and collect? Some of it will. Right. Some of it will get turned into apartments. We're chronically short of affordable housing across the world. I'm worried about the co-working model. In terms of looking at WeWork, won't work. Right. If you look at how they're taking long-term leases, they're selling on a high cost short-term basis. The risk model is asymmetric. Okay. Everybody, look at tonight. We're all working from all over the world, but this meeting couldn't take place without Zoom. How much less stressful is it to be able to cut that commute?
That's a good point.
Yeah, it's way cheaper. I mean, we're 40,000 people. The building in London, our global HQ, is normally 1,000 people. Where everybody is working from home. People are sleeping better. People are sleeping better. They're a lot less stressed. So I'm very, very doubtful that we'll be going back full time.
Okay.
And what I'm seeing on the radar in both New York and in London and in Hong Kong is loads and loads of space to sublet. So
And-
values are definitely gonna drop.
I think I want to jump in. So what you're saying is 100% correct, right? But like David Solomon just said today, how he's got to get everyone back to the office, because from your perspective, it makes sense. But from these massive organizations, how do you develop juniors and even senior level talent over Zoom in real live deal making? I think that's the one issue, because right now what we're seeing is deals are getting done, right, in the boroughs and London, but it's the same people over and over again. So I think my only concern moving forward is the development of talent is taking a hit right now. And I think from a growth perspective, it'll be interesting to see how the adjustment is, because what companies are doing even in Manhattan and some of our competitors, I mean, people are moving to Austin, Tampa, Charlotte, and Phoenix, and they're working from home out of there. However, that real life interaction, only time will tell to see the short and long-term effects.
In my opinion, I think it's not scalable. I mean, as it's temporary and it's a new idea, so it's working in theory, but it's scale. I mean, conference meetings, like you said, like all the things that we do to really build a business and to grow our brand, I think a lot of it has to be done in person. They're the interpersonal connections that can't really be replicated online. So I'm very interested to see, especially with the office spaces and the shopping centers, what is 3 to 5 years looking like? If you don't mind me asking, Simon, what are you kind of envisioning us coming back to? As great as it sounds, 1 million square foot building in the middle of Manhattan being vacant, it's not scalable. It can't be supported. And even if you try to remodel it into some type of hybrid building or some kind of other space, it's not its highest and best use. And as we all know, we got to real estate for our highest and best use. So how do we go about what are you seeing, Simon and Paul, the next 3 to 5 years in the office space, retail space, and just the commercial space as a market?
So I think Shahid's point is absolutely on the money. I mean, look at the collection here, Andrew, Grace, Jennifer, Laura, the team. People sell to people. Looking at collaboration, look at education, look at relationship building. All of these things, none of this is going on. People are stilted. We've gone from an expansion economy to a contraction defensive economy. But in terms of, do I think the world's going to absolutely have a party and go for it? Undoubtedly. Undoubtedly, people will embrace travel. Look at what the airline bookings, look at what's happening now. This will be the swinging 20s. I've no doubt of that. But
I like the name of that.
Government, the G9 have got to help capital and get the workforce back. They've got to stimulate it somehow, whether it's rate reductions, but there are enough really good business people.
What are you guys looking at for rates? What are you guys looking at in the UK? Because we're at sub 3. I mean, how much lower can you imagine? With inflation being at about 3%, isn't money free at this point? I mean, and I'm sure as you guys can agree, that's a bit scary. Wouldn't you say long term to have money be so cheap and so accessible, that kind of affects kind of the natural flow of the market?
Yeah, but we've gone Japanese, haven't we? We've gone Japanese.
Okay.
It's deflation, not inflation. It's long and low forever, and it's certainly not in the interest of the G9 to if inflation comes back a bit, hey ho. But they've got so much debt. We've come out of the World War II +2. It's so. Is there going to be a whole load of debt forgiveness across the table? Could be. But they've got to do something for the corporate. That this furloughing model that's been adopted across the world has kept the workforce alive, and that was essential. But if you're running a bar or you're running a clothing manufacturer, you're hurting. You're on a cliff edge at the moment. So I think we need some Keynesian economics, to my mind. You've got to pump money into the economy, and we've got to get some wage price inflation going. Look at what Joe Biden's doing. He's putting $1,000 through the keyhole. What are you going to do with it? You're going to spend it, aren't you?
Yeah, back into the economy. Back into the economy. Yep.
We've got to get big projects. We've got to get roads built. We've got to get hospitals built. We've got to start building life sciences. These sorts of sectors. So I think we've got to look at the businesses of the future rather than the businesses of the past. If you look at oil, okay, you look at tobacco, you look at those things, there's too much capital stuck into those areas. We've got to get money into the Bostons, into these companies, computing science, drug manufacture. DeepMind, owned by Google, have cracked the protein code. They're going to crack cancer. Those are the areas that are going to, I think.
Yeah.
But also, COVID has accelerated suburban growth with more of an emphasis on lower density environment and space. How do you guys think that has affected the development industry inside of things?
I think that's temporary. I mean, as great as it sounds, city dwellers are exactly that. They're city dwellers. They may in theory look forward to the space and the privacy, but there's nothing like being in the heart of a city. And I think that we'll eventually get back to, I mean, it'll be maybe post-vaccine or post some type of, ordinance. But I look forward to going back to a city dwelling environment, because that's the speed that keeps the economy going, in my opinion. That's the speed that keeps capitalism going, keeps the US going. And that's who we are as a country. And I look forward to getting back to that.
But to that point, even the urban marketplace is being reimagined. Bicycle lanes, open space, fewer cars.
There's talks of below 64th Street in the next 5 years, looking to completely eliminate driving as a whole. It'll be only available to taxis, and other than that, it'll be a very high gas consumption tax for driving below 64th Street. As I'm sure you guys know, the heart of finance, the heart of New York City, Midtown, is below 64th Street. So I think a lot of things that we're kind of prophesizing now, I would love to see them in application, because I don't know if they could really work at scale. And that's what I'm very excited about for the next 3 to 5 years, and kind of what we're in the space we're working in, because it'll be quick. It'll be a very quick transition, as I'm sure Simon can attest to as well. We could have never really imagined where we're going to now in the last mile distribution in e-commerce as a whole 2 years ago. It was meant to be a very gradual process, but because of COVID, because of things going on in the world, it was expedited very quickly. And when things kind of level back out, I'd love to see kind of where it leaves the market and leaves us to deal with. Shahid, what are you seeing in the city as well, to kind of answer that to the next 3 to 5 years as far as urban development? I know you do capital finance as well. Where are you seeing?
Absolutely.
Where are you seeing the market's capital going at this point?
Yeah, I think for the short term, I do believe in the single family rental and specific suburban locations. And I'm speaking for New York specifically. I mean, you have Westchester County, Fairfield County, Long Island, and North Jersey. I think those suburban pockets will attract. However, specifically in Manhattan, which is already starting to happen, rents are ridiculously low. Condo sales are
year over year. The only borough that's grown in median rent is the Bronx. Manhattan, Brooklyn, and Queens have gone down an average.
I will 100%. I do see all the hotel conversions to multifamily in Midtown happening over a 2 to 4 year period. Okay. So the short term outlook, I do believe the single family rental and suburban markets close to urban cities will perform in the short term, but in 3 to 5 years, if certain hotel conversions do fall through in market or neighborhoods such as Murray Hill, Grand Central, and Financial District, I think if you look at all the tech tenants, right, and this is getting a little off topic, but for New York City office, if you look at the scope of tenants, you also have the Silicon Valley that has made their second headquarters in Hudson Yards, right? So they'll tell you everyone's working from home, but they're still essentially paying the rent. So it'll be interesting to see what tenants actually show up and what tenants don't, because leasing activity, I mean, the Silicon tenants, they bailed out Manhattan office landlords, right? I mean, Zuckerberg got an incredible lease, but who even knows how that happened? But I think that's the real tale, because and I'll end on this, right? You saw really New York City go from Financial District, be the hub. Now it's Midtown, and now slowly maybe Rock Center, but now it's going to Hudson Yards. So the trend of the office markets versus where the multifamily will come back, I think that's the question. Because if people could afford to pay the multifamily in New York City as a young professional, they're going to do it. It's my opinion.
I'd like to piggyback on that. I think we have to kind of reimagine what we see a city to be, because we're imagining Manhattan, Brooklyn, Queens, but what about the small cities? What about the Stamford, Connecticut's, the White Plains, New York? I think there'll be a huge influx of people looking for the city life, but at a smaller scale, a more condensed scale. And that's what I see will really happen in the next 3 years. Well, I, as a 20-something year old, I want to be in a city environment. Do I want to live in Middle Manhattan? Maybe not necessarily. I'd like to live in a Stamford, a White Plains, even a Yonkers, which is being reimagined now. I see that kind of being the real pivot in the market into the small cities, which are also located in suburban areas. You kind of have the best of both worlds, but that's kind of what I'm seeing at this point in the market.
Yeah.
A lot of redevelopment. We're seeing a lot of redevelopment in places like Newburgh, Kingston,
Beacon,
upstate cities that have had beautiful, beautiful buildings
Yes.
that have fallen into disrepair, and now you can get them for a song and develop them.
Same thing I'm
I
saying.
think West Palm Beach has become the new Stamford, because it's also about jobs, right? Like people want to go to these smaller cities, but it's even like I'm in Tampa Bay right now, right? I think Tampa has become the Philly of the South with the healthcare tenants, and the tech in the future could be the Austin of Florida, but the tech tenants haven't even arrived yet, right? So I think for smaller cities, people like to get caught up on the name, but data doesn't lie, right? If you look wherever the jobs are, I think that's where the people are going to have to go.
Okay. I agree with that.
So I if you guys don't mind, I'm going to chime in here. I do residential real estate for Westchester County. Okay. So I don't know too much about the commercial market, of course, but I figured if there's ever a time for me to chime in, this would be it, especially now that we're talking about.
Your business should be booming, Sam. All of the millennials and Gen Z.
Booming is an understatement when it comes to a seller's agent. Absolutely. When you're a buyer's agent, though, it's a whole nother ball game. We're seeing right now, we haven't seen days on market. The average days on market in Westchester are 42. We've never seen that before.
Yeah, that has to be a record low, because I'm imagining a market of 100 days plus. So 42 is unbelievable.
42. And then to top all that, if we go back to 2010, the average days on market was 140.
Wow.
So that's,
what would you say, Sam, what percentage of homes are going for over ask?
Yeah, my exact question.
I tell my buyers, every one of my buyers, I say, listen, if you want this home, you're going 20 over ask. That's the only way you're going to. No, 20K, 20,000.
But I mean, I get it.
All right.
Sorry about that. Yeah, I should have emphasized the 1,000. But no, we are seeing and it's the same with the rental market. I know that in New York City, in Midtown, where I have all my friends, a lot of my friends from college are all in Midtown, over in Brooklyn, Queens area. We definitely see the prices there are lower than somewhere in Westchester. And mind you, you can't even find a spot to rent in Westchester.
It's not a renter's market by any means.
No, it's the same thing. I feel like right now the renters are following the buyers, as in how hard it is to find. On top of that, your month supply right now. Hold on, if I could pull it up here.
I think, Sam, that the themes are the same across the world. I mean, we've seen this poster behind me is Dublin. That's Facebook's headquarters. Loads because the cities are shut. People have moved to the suburbs. They want more space. So it's the same in the UK. It's the same in suburban Paris. It's the same in Hong Kong. Et cetera, et cetera. I think the big question is, we've got a vaccine. We need to share that vaccine across the world. What happens when we come out? Yeah, I think, Shahid, I think you're right. There's no doubt that collaboration is a very important part of the global economy. People, from an occupational therapy perspective, will want to get back in to see their friends, see their work colleagues, see the people they trade with. Yeah, we've all got cabin fever. Yeah, cabin fever's led to loads of trade for you, Sam. I mean, our offices in the UK, certain offices in Fulham, in the core zones 2 and 3 in London, in the blue stocking regions of the UK, Oxford, Wimslow, etc. We've had best ever markets shut down. We've handed all the furlough money back to government. Yeah, we've done 30% more than the turnover in 2019. I don't think it would be the same in 2022.
All very true. We've got time for one final question. If you'd all like to give your opinions, what advice would you give to students wanting to enter the real estate development market?
I'm on mute. I just realized.
Do it.
Two
That's what I was
things.
gonna say. That's
Yeah, I was gonna say it's definitely a thing that it'll be hard to, and take this with a grain of salt. It'll be hard to ask your peers, whether it be family or friends, about real estate if they're not in real estate. To be a real estate agent, be a real estate professional in any way is a very specialized trade meant for a certain type of person. And I recommend that if you feel yourself you're the type of person, you go all in, because I got in 6 years ago, and where I'm at today and who I am today, I never could have imagined. So if the gut feeling feels right, go all in, and you'll be surprised where it turns out, where it could lead you.
Yeah, and I want to bounce off that too. I'm in residential, but on top of that, it definitely takes a certain kind of person, and you have to be dedicated and devoted to real estate, much more than any other type of profession out there. Absolutely. It is a grind every day. You're going to be up, you're going to be calling, you're going to be talking to everyone. But the thing is that you got to have a passion for it. You got to love it, and you got to love the people you work with. Again, real estate at the end of the day is sales, right? Mm-hmm. And you got to love people in order to love sales. It's the only way that you're gonna be able to advance and go forth in the market of real estate. But really, it's great.
Yeah, I was also say it's very rewarding as well, because I'm sure Sam can attest to, once you kind of built something of yourself, because it's such a brand-based business, I feel like there's a lot of value in being individual, being exactly who you are and building your brand exactly who you want it to be, can very much strengthen your career and strengthen the path you go on, because it's very easy to kind of lose sight of your goals and lose sight of who you are in a new industry. But exactly who I've been my entire life, I've kind of used to transition into real estate. I played college basketball, so I was very competitive growing up. I worked well in a team environment, and real estate is exactly that. Whether it's you're working by yourself, working as a team, it's there. You have to know that you're a small piece of the puzzle. If the deal's meant to get done, it'll get done with or without you. So you have to kind of figure out where to get yourself and bring value so you can build a brand. So I'd love to definitely add that to it.
And I'd say find a mentor, right? And always be learning. I think I've talked to my mentor twice a day, and I don't think I've ever made a decision on a real estate deal myself, right? We always having multiple opinions, multiple eyes on the deal, and always getting advice and knowledge from someone that's done it consistently will always help you put yourself in a position of success. So I think that this was great. I really appreciate everyone and letting me do this. Thanks, Andrew, and Mr. Hope. It was a pleasure learning your story. And
absolutely.
I think
guys, can I request that maybe you put your contact information in the chat? Because this session is really fantastic, and I know that there are a number of people, and certainly at least one of my students who have other questions, and if they could contact you, that'd be really terrific.
Yeah,
absolutely.
Delighted to. My advice to you, Laura, is
to everyone, Simon.
To everyone, is to get a job, okay? Because Diamonte, to pick your point, you'll learn out what you're good at. I mean, I learned early on that I'm a salesman, so I'm looking for motive: death, debt, divorce, disease. Why are they selling? Are they a price taker? Are they a price maker? I mean, these are the skills that Sam will use in Westchester in terms of working out how does he close a deal. So I think it's all about looking at what you're good at what skills you've got, interpersonal skills. Are you a gymnast on the computer? Where do you sit in the supply chain of service? So it's getting a job, and that's going to be tough. But once you get in there, you'll learn more about yourself. So yes, you need somebody that you respect, someone that's going to give you a chance. But it's the experience is what will determine where you want to go and what you want to do.
Andrew, anything to add?
No, I mean, it pretty much sums it up. I mean, thank you everyone for speaking. Thank you,
for having
Sam.
me, for sure.
Yeah, no, this is a great event. I'm glad to hear everyone's feedback, especially it's kind of international too. Simon in the UK, you know, you guys are in Diamante, Shahid, you guys are in, you know, New York City, New York area. Sam
Tampa.
also Westchester. You know,
I would
thank
say the
you, Sam.
market's very reflective once the market kind of makes its direction. And Simon and Paul, please, if you agree, please agree as well. You know, once the market's moving in a direction, it's moving in a direction as a whole. That's kind of what I've seen. And once it's going, you kind of just have to figure along and make sure you're kind of learning and following the path that's going on, because it happens quickly for sure.
Well said.
I think well done to the PACE team for organising. I thoroughly enjoyed it. I've loved meeting everybody.
That's great.
Hearing different themes. Guess what? Without Zoom, we wouldn't be able to do this. So
Very good
it's,
point.
it's another
Very
takeaway
good point.
from the pandemic, isn't it?
Yes,
Yep.
it is.
In terms of globalization.
I definitely look forward to connecting with everyone and kind of helping us all work together in the future. And hopefully in the future, we can have another one of these calls and these panels. Learning experience, a phenomenal experience. And I'm thankful again.
Thanks,
Likewise.
guys.
Definitely.
Yeah, maybe next semester, if we have a real estate event, you guys can all come back. And
Hopefully it'll be live.
Yeah, hopefully we'll
Yeah,
actually
great.
be there and not on Zoom.
Laura, Andrew, thank you for putting this all together. All of our speakers, this was awesome. Thank you so much.
Thank you, guys.
Our
Have a
Thank
good
you,
pleasure.
guys. Please join LBA for next week's event. That would be great. We've got PK at the helm of that one.
No,
Next week is the career fair.
We're
March 10th. Careers in Marketing on March 10th. Next week, career fair.
Career fair. Register.
Great job in real
Sorry,
estate.
Jim at the helm and then PK.
Have a good
Thank
day,
you,
everyone.
everyone.
all right,
Well
thank you, everyone. It's been
Thank
great.
you.
Thanks, guys. Appreciate you. Talk soon.
Bye-bye.
Thank you very much, PK. That was a good event.
Bravo. Nicely done.
Yeah, we had a good amount of people here, which was great.
Terrific conversation. Your dad was great.
Thank you very much, and I will see you in a few hours.
You can keep him.
Oh, thank you.
Now you can develop his business in the US. You're all set.
Yeah, I know, very, very much so. It was a great conversation. Yeah, hopefully we can, these kind of events, connecting and talking and not even needing to be like, okay, we've got questions next. It's all about just the flow of the conversation can be done in person, hopefully soon.
Yep.
Yeah, I thought it was great and a great turnout. I think it was a great event.
Amazing. All
I mean,
right.
it's looking like a 10.
Ciao.
Right.
Ciao for now.
See you in a few hours, PK. Bye.
Bye.